Okay, let's unpack this. Imagine a world where your financial potential isn't just defined by a single number, but by 1,000 different facets of your life. That's really the promise of AI in lending, and today we're taking a deep dive into a company making that a reality. Upstart. We're drawing our insights from a really interesting analysis from Genesis Real Estate Group. And our mission today, to explore how Upstart is leveraging artificial intelligence to redefine the lending landscape, making credit more accessible, efficient, and, well, inclusive for you. We'll cover its journey, how it operates, its products, and the value it offers.
Yeah, and what's fascinating here is how Upstart isn't just, digitizing an old process. They're fundamentally rethinking who gets access to credit and why that actually matters to the broader economy.
That's a huge shift, isn't it? For
Yeah.
so long, the traditional FICO model, well, it's been the gatekeeper. But it often excludes capable borrowers just because it relies so much on maybe a limited credit history, doesn't paint the full picture.
Exactly, and that's the core problem Upstart tackled when it was founded back in 2012 by former Google execs Dave Gerard, Paul Gu, Anna Councilman. Their whole vision was about challenging those constraints.
So what was their solution? How did they approach it differently?
Well, it's really innovative. They built this AI-driven platform. It analyzes over 1,600 variables, so way beyond just your credit score. It looks at things like your education, your job stability, even like behavioral data points, all to predict repayment ability much more accurately.
1,600 variables? That's a lot more data points than just a FICO score. And you can see it working. Since they went public, what was it, December 2020? They've grown incredibly fast, empowering over 3 million customers with loans by June 30, 2025. That's significant reach.
It really is. And if we connect this to the bigger picture, their recent performance, Q2 2025 earnings reported August 5th, they actually showed a return to GAAP profitability. That's a big deal for a company like this. Loan originations just soared, up 154% year over year to $2.8 billion. And conversion rates hit nearly 24%, 23.9% to be exact.
Wow, 154% growth. That's massive.
Absolutely. And analysts are looking at this, despite some market ups and downs, they're predicting Upstart could triple by 2030, mostly because of this AI edge they have. It really highlights this major shift in how financial risk is being assessed and managed now. More dynamic, data-driven.
So let's dig into how it actually works. It's important to understand Upstart isn't a bank itself, right? They operate as an AI-powered lending marketplace, offering, what did you call it? Origination as a service.
Exactly. So think of them as a connector. They connect regulated banks and credit unions with borrowers using their digital platform. Lenders basically plug Upstart's API into their own systems. They white label the tech. So they get Upstart's AI underwriting power, but within their own branded customer experience.
Okay, so for the banks and credit unions partnering with them, what are the big advantages? How does this simplify things and help them grow?
Oh, the benefits are pretty substantial. First, there's the integration and customization. Lenders adopt the platform, but they set their own pricing, their own risk appetite. Upstart handles the heavy lifting on the AI underwriting, fraud detection, compliance stuff.
Streamlines things for them.
Hugely. Then there's the origination process itself. Applications come in, maybe through lender site or Upstart's own marketplace. The AI assesses them in seconds and famously approves like 2 to 3 times more applicants than traditional models would at the same risk level. The lender funds the loan. Upstart gets a small origination fee, maybe 1–2%.
And it doesn't stop there, right? There's ongoing support.
Right. Ongoing support is key. Upstart provides servicing tools, analytics, even helps with secondary market access to optimize portfolio performance. It's end to end.
And we're seeing real uptake. The analysis mentions over 100 partners now, including recent ones like Cornerstone Community Financial Credit Union, just added in August 2025. Billions in originations powered by this.
Yeah, the tangible benefits are clear. Lenders see serious portfolio expansion. We're talking 20–50% loan growth, often without spending more on marketing. They just tap into Upstart's existing customer base of over 3 million people.
That's essentially free customer acquisition.
Pretty much. And then there are the higher returns. The data shows 11–27% better net annualized returns compared to traditional methods. Plus, charge-offs are 30–40% lower, and fraud is tiny, consistently under a 0.3%. And finally, operational efficiency. Less manual review, lower costs, built-in compliance. It just makes sense.
It really does, especially now, maybe. In a higher interest rate environment, how crucial is this kind of edge for banks to stay competitive?
That's a really good question. I mean, in a high-rate environment, risk management is absolutely paramount for financial institutions. They need to grow, but they need to do it smartly. Margins get squeezed. So a tool like Upstart's AI, which can more accurately price risk and find good borrowers that others miss, well, that becomes incredibly valuable. It helps them expand their reach, maintain returns, and frankly, de-risk their lending operations when capital might be tighter or more expensive.
Makes sense. Anything that offers better risk assessment while opening up new customer segments has got to be appealing. Okay, so that's the lender side. But here's where it gets really interesting for many listening. Let's talk about the process for you, the borrower. Describe that streamlined experience. How easy is it?
It's designed to be incredibly fast and transparent. It starts with maybe a 5-minute online application. Crucially, it uses a soft credit pull initially, so checking your rate doesn't hurt your credit score. It gathers info on your income, education, why you need the loan, the basics.
And then the AI kicks in.
Instantly. Upstart's algorithm processes that data and delivers personalized loan options right away. If you're approved and decide to proceed, then there's a hard credit pull. But often, there's minimal extra paperwork needed. And the speed is, well, it's remarkable. 99% of the time, funds are dispersed the very next business day. Set up with autopay via ACH, fixed-rate terms. Simple, predictable.
That really emphasizes the digital-first approach. It sounds incredibly inclusive, opening doors for people who might have been shut out before. Young professionals, people rebuilding credit, maybe.
Absolutely. It makes credit accessible to a much wider range of people, moving beyond just that one score.
And Upstart applies this AI across different types of financial needs, right? It's not just one kind of loan.
No, their product suite is quite diverse now. They have personal loans, unsecured, from $1,000 up to $75,000. That limit was expanded in 2025 in most states. APRs range 6.7% to 35.99%, typical 3 to 5 year terms. Origination fees are transparent, 0 to 12%. And importantly, their rates average about 33% lower than traditional models. That's a big saving.
Significant difference. What else?
They do auto loan refinance, helps borrowers save on existing car loans, average savings around $131 a month. APRs there are like 5.17% to 35.99%. Then there's the home equity line of credit, HELOC, through Upstart Mortgage. Lines from $26,000 up to $250,000 fixed rate draws. And here's a key thing. No appraisals required generally, which is huge. Data from July 2025 showed 10% of their ELOCs closing in 3 days or less, funding in 9 days or less. Super fast for home equity.
Wow, no appraisal and funding in potentially under 10 days. That's a game changer for ALCs.
It really speeds things up. And finally, they also offer short-term relief loans, smaller amounts, $200 to $2,500 for urgent needs. They approve people with incomes as low as $12,000 a year. APRs up to 36%, shorter terms, 3 to 18 months. Really focused on accessibility.
So a broad range, all available nationwide, obviously with state-specific terms, and backed by regulated partners. That builds trust.
Yeah.
But underlying all of this
So
for
that-
borrowers and lenders,
Yeah.
it's that proprietary AI. Let's zero in on that. What makes it their secret sauce?
Well, it's incredibly sophisticated and constantly learning. They unveiled their new Model 22 in 2025, showed something like a 17-point accuracy improvement over previous versions. That's a big leap in predictive power. It crunches billions of repayment data points to really minimize defaults and fraud. Like we said, fraud rates are consistently below 0.3%.
And they're pushing the envelope further.
Oh, yeah. At their AI Day in May 2025, CEO Dave Girouard showed off prototypes using large language models, LLMs. They believe this could lead to like a 10x improvement in predictive power and personalization down the line. Imagine that.
A tenfold gain.
Yeah.
That's mind-blowing potential. But with all that power, fairness is critical, right?
Absolutely essential. And Upstart emphasizes their continuous bias testing. They work hard to ensure the models produce equitable outcomes and comply with all the fair lending laws. That's non-negotiable in this space.
Good to hear. Okay, so it's been a big year for them. We mentioned the Q2 results, 154% origination growth, back to profitability. What else stands out from 2025?
Well, partnership momentum is strong. That August 27th deal with Cornerstone Community Financial Credit Union for personal loans is just the latest example. They've also had deals with Advia Credit Union, Holyoke Credit Union recently. They launched tools for direct credit card payoffs, raised another $50 million specifically for AI development. Lots of activity.
And how do they stack up against competitors? Lending Club, SoFi, Affirm. What makes Upstart different?
It really comes back to that core AI model. While others are innovating too, Upstart's focus on using AI for deeper underwriting and inclusivity is quite distinct. And that data point about delivering 27% higher returns for lenders, that's a powerful differentiator that resonates strongly with their bank partners.
Right, that bottom line impact for the lenders is hard to ignore. So looking ahead, what's on the roadmap for Upstart?
They're definitely not standing still. Plans include deeper integration of those LLMs for hyper-personalized lending offers. They're looking at global pilots, expanding internationally, and new products are likely small business loans are often mentioned as a possibility.
And the market outlook. Analysts still predicting that tripling by 2030.
Yeah, despite some near-term bumps you see in the market, the long-term view from many analysts remains very positive, especially if interest rates start coming down, which could boost loan demand. The potential for AI in this space is just massive. Like the CEO, Dave Girouard, said recently, we're in the full bloom of AI lending. Upstart sees itself right at the heart of that transformation.
It certainly seems that way. So wrapping up our deep dive today, it's clear Upstart is making a real impact, challenging old assumptions, using AI to make credit more accessible, faster, and arguably fairer for you, the borrower, and creating value for their lending partners, too.
Absolutely. This exploration really highlights how powerful AI can be in finance. It's not just theory, it's unlocking real opportunities for both lenders and borrowers. These data-driven insights are opening doors that were previously closed, creating a more dynamic and hopefully more equitable credit market.
So as you think about the power of AI analyzing over 1,600 variables to understand financial potential, here's a final thought. What other traditional systems, maybe in your own life or your industry, might be completely transformed if we move beyond a single, narrow measure to a truly comprehensive AI-powered understanding of potential? Something to think about.